But seriously though, these blueberries taste like candy.
Yeah, good. No more candy. All blueberries, right?
Stop it. No more candy. I got to bring the candy machine back here to the office. I got it at home. I've already refilled it a couple times.
Blueberries.
The guys doing the bathroom, we leave quarters out for them so they can just put them in and turn it.
Oh.
I come home, it's like half empty. Hey, welcome to the closing beat, everybody. Happy Thursday. How you doing out there? Hope you're having a good day. Seems a little bright. I don't know. We're working on it. We're in the new studio here. And actually, tonight, as you know, for our clients, every Thursday we do a wine and wealth class. And tonight, maybe for beginners a little bit, maybe the intermediate people, we're going to talk about that tax advantage, how we can utilize your accounts. And I'm going to actually go through details to show how we don't just get to the end of the year and accept that the markets have been up and everything. We want an advantage. We want some kind of extra advantage because, well, that's what the rich people are doing, and you should do the same as well. So that'll be tonight at 8 o'clock. We're going to do it right here so I can actually draw out some examples and everything. Come have a glass of wine with me, whiskey, bourbon, whatever it is you like. I think Buffalo Trace is going to be on the menu tonight. We'll see how that goes. Also, our research site, if you want to join the research site, $13 a month, helps us out, continue to grow and do all the videos and stuff that we like to do. If you're a client, it's already free for you, and it's in there in our portal. It's custom built there for us. We call it the dojo, just as you get it. Yeah, it's kind of funny. So hope you'll join that and check it out. We got a lot to cover here today, so I'm not going to mess around there. How we doing, Alexander? I love it. You guys are like early, ready to go. I like it. He's like the brandy. Bring whatever. We don't discriminate tonight. We'll see you there. Excuse me. I was eating blueberries, and boy, they're phenomenal, by the way. I probably should eat blueberries more often. Okay, let's get started here. So the markets. As far as earnings go, Domino's Pizza was one of the only ones to miss on earnings. We'll cover that here in a little bit. Inflation continues to be the focus there. The Fed taper, we already know about that, so that's kind of old news there. The Fed said it turns out maybe this transitory inflation is going to be more transitory than we thought, so we may want to start tapering back our bond purchases. I think that starts in November, at least that's what they've signaled anyways. And as for earnings, every earnings season has a focus, right? And so what's the focus this earnings? Every earnings season, I bring it to you. What are investors really looking at? Is it the beat on earnings? Is it higher profit margins, more subscribers for things like Netflix and stuff? Well, this earnings season is actually going to be about companies have higher costs. You see it. I mean, you know, right? So you've got higher costs there by the company. Are they able to pass that on to the consumer? And if so, how successful was that? So that's where the focus is. What are they going to say about higher costs? Are they eating those costs for now in hopes that maybe these costs are transitory? Or are they passing them on to consumers? I think you can kind of see they're passing them on to consumers a little bit. And how's that whole thing going? Like, how's it affect their margins overall? So that's what's happening there. And we'll cover it as we see it. As far as the stock markets go here today, here's the S&P, breaks the downtrend. We just talked about this yesterday. The more you move away from yesterday's high, the more you have people convinced the downtrend's going to break, and you get that excitement. Today you had a lot of excitement. Actually, it was a pretty calm day overall. If you look at the markets here where they open, it was just consistently and cleanly higher throughout the day. Very, very few pullbacks overall if you look intraday. And so you got a recipe for a market that closed at highs. You got to always tell yourself, the market closes at highs, that's a man-made event, right? If the market closed at 5 o'clock, would we have just kept going? What if it closed at 8 o'clock at night? And would it just kept going? In fact, I think after hours, it's up just a touch more. So the fact that we closed at highs is always a strong signal, especially after a large range day like that. So don't let that, it's a sign of momentum, right? You don't want to all of a sudden get super excited, there. As far as trying to bet on the opposite direction anyways. All right, so as far as the S&P goes, a lot of things happening here today. Let's talk about this. Hey, Andres, how we doing today? Good to see you, good to see you. I'll start with oil inside the S&P here. Oil refuses to pull back there, almost to new highs here, but the problem is energy stocks. There you go. They're already overbought. So it was a good day. I mean, I'm not complaining overall, but it was third from the worst performing sector here today. It was not the leading sector, and that's just because it's already overbought. You got to be very careful if you're buying stocks in there. Other than that, it's going to be financials because they're the focus here with earnings. You got Bank of America, Morgan Stanley, Wells Fargo, Citi all reporting. Bank of America's trading revenue beat and almost every other metric beat. By the way, this is the first time in 7 other earnings quarters that it finished positive. For the last 7 earnings reports, the stock actually traded lower. Today it breaks that trend, and I don't think anybody's complaining. So good on them for that. A couple others here. What do we have? All of them reported good earnings. There was nothing really wrong there. If you look at Wells Fargo, that one was lower on the day there. They saw their charge-offs about half as expected, which JP Morgan reported yesterday there. Trading revenue beat, almost every other metric beat there for them. Morgan Stanley in the news. We don't have to cover every stock here. The only weakness really for them was wealth management. It was down 3.3%. I didn't see why. I don't know if they went into detail there, but Morgan Stanley, that was basically the only blemish on their earnings report. Citigroup. They also reported well. Nothing to really be upset about there. So we don't have to go over that. We now know, by the way, if you look at the big financials there, we now know that over half of the loan loss provisions that they put off to the side. Remember, COVID hit and they're like, holy cow, people aren't going to pay their mortgages. They're not going to pay the loans we've given them. We're going to take this chunk of cash and move it off to the side, billions of dollars. And now half of that has been redeployed, meaning they feel comfortable that people are going to continue to pay their loans and stuff. So that's good news if you're strong on the economy, bullish on the economy, and hope for continued recovery. The NASDAQ doing the same thing. It was a little weaker overall during this downturn here. You got a 2% gain on the day. It was a broad rally, but semiconductors, that's where some of the excitement continues. We talked about it yesterday. It wasn't quite, showing itself, but Taiwan Semiconductors comes out with earnings here, better than expected, raised guidance going forward. Also, their profit margin, over 51% now. That's impressive. They talked about capacity, meaning the ability for them to produce and put out a new product. The capacity would likely be tight through the rest of next year. So a little bit of a downer for those of you looking in other areas where you need semiconductors to buy the cool gadgets and whatnot. But good news for them, drives higher margins, and they obviously have sales covered for the next year, or at least they hope. Moving on. So we got the Dow back above the 50-day here. It officially closed above the 50-day. 2/3 of the Dow gained more than 1%. I'd actually say it's almost a little bit more than that. Great day for the Dow. The only stocks lower, you had Boeing, we'll cover that news in a second, and Merck continuing to pull back. This is from their COVID pill, the big spike there. It's pulled back since then, obviously overbought. And so now moving into a range where, do you get excited about it? Do you like the COVID pill idea? Can you put the politics aside for a second and see if that's a good investment? Or trade even? United Healthcare, I think, was the biggest contributor to the gains here in the Dow. Yeah, it was the biggest contributor to the Dow today. They beat on earnings, raised full year guidance there. It's the Optum RX division. I don't know what percentage of revenues is. I think it's in the 20s. But the Optum RX is the reason why they beat on earnings if you look at the details there. Guess the Dow? What do we got?
New leaderboard today. We got Vanessa, Linda, Donna G, B, and Johnny Lee. Johnny Lee was your winner last week. B has been all over the leaderboard last couple of weeks, so those are your top 5 for today.
Oh, B's giving old Jerry Lou a run for his money, huh?
Yeah, maybe the new Jerry Lou is B.
You start seeing the same names, and you wonder, is it that not a lot of people play? But I looked. Well, there's a lot of participants there. Just old B and Jerry Lou. I mean, you guys are rather in tune with the market. It's good to see. All right, as far as the sector breakdown here today, there you go. On the right-hand side of your screen, you can see what happens. I'm going to do something a little bit different today. Every sector was in the green by 1% or more. 1% or more. That's the type of consistent day it was today. But that changes the weighting of the sector. You familiar with that? Here you go. So the S&P breaks down into 11 sectors. If you're not familiar with this or you're brand new, now you know, right? 11 different sectors. Every day we talk about the index, the sectors, and then the stocks that make up those sectors. Every single day without fail. So here we go. This is where we stand. At the moment, all tech stocks account for over 1/4 of the entire S&P. In other words, if tech stocks have a really bad day and everything else has a really good day, chances are the market's going to be flat to slightly lower. They're pulling the most weight in that sector. So if we're looking through here, the S&P, of course, made up of 11 of them. You can all see them there. It's based on size overall. Right now, tech's leading the way at 27%, which is about 2 times higher than 2 times higher than healthcare. And, of course, bigger than the entire bottom half. Look at these. Utilities, materials, real estate, energy, and consumer staples, industrials. You got tech bigger than all of them combined. So all of these could have a strong day, and tech could have a weak day, and the market would be flat. I mean, assuming these didn't do anything here. The bottom barely makes up of 1/4 the entire market. You have to go 1, 2, 3, 4, 5, 6 different sectors to make up 1/4 of the entire market. Now, there are 4 others, of course, that have at least double digits. Financials are always one that gets attention because it fluctuates more. These are big market cap type stocks, so little moves in them can make them jump up or down rather quickly. And here's the thing. This is where it stands right now. But how have things changed throughout the year? That can also tell you where the excitement is, where money may be shifting in general there. So for example, like tech in general, if you look at the September high, which was like September 2nd, where we hit the high somewhere in there. Yeah, right at September 2nd, right? So if we were to look at that and say, well, what's the change? At September 2nd, the tech sector was actually just over 30%. So about, 1/3 or almost 1/3 there. That was a 20-year high, by the way. Now, here's how things have shifted, and in particular, how things have shifted for the year. So we know, we've talked about consumer staples there. Consumer staples has fallen the most. It's really hasn't been able to put together a meaningful rally. If you were to look at the staples there, people they're looking for growth, right? Here's the beginning of the year. You got a slight increase, right? Roughly, what is that? Like 5% on the year. So, not much to write home about. And that's just because people have said, I'm not scared. Right? The market's doing great. It continues to do great. Why do I want to play defense when everybody's playing offense? All right, financials added over 1%, right? So it shows you how quick they can move. That was the rally that happened earlier in the year there in hopes of higher rates, right? And so now they were really getting it there. Only 3 others saw an increase in their weighting: real estate, communication services, and energy. You can understand energy, and I would argue this is pushing 0.7% at the moment, given the recent rally there. And you can see the rest of them have lost a little bit. Healthcare is also a little bit volatile there, and you like that healthcare has actually fallen. That was the sector I mentioned yesterday. I hope it gets a little bit weaker. That could play into some good ideas for next year. So it's a different way to look at it. It's not always about just finding a stock. It's about finding where money is rolling to and then finding stocks inside of that area if you're more of a portfolio builder, kind of like we do here. We build our own portfolios, we manage our own portfolios, we don't buy mutual funds and stuff. So it's really important that we kind of keep tabs on where's money moving. Are we playing along with that money, or are we just sitting around doing whatever and being typical advisors that, I don't know, what do they do? Play golf or something? You can never get one of those guys on the phone. You know what I mean? Like, I'm here every day. I talk to maybe like 12, 15 advisors a month that reach out and they're like, hey, I saw you on YouTube, I just want to pick your brain a little bit. And then you can never get them on the phone. And I'm like, all right, well, I'm happy to chat. And then they're like, I'm not available for the next month because I'm in like Connecticut or something. Side topic. Anyways, new highs and lows for the day. You got 31. 31 new highs, no new lows, actually. 32 by the end of the day, actually. Sorry, I said that wrong. LKQ is the breakout we talked about yesterday. That continues. You love it when a stock does not expend all of its energy to break out. That's the lesson from that story there. You also got lows. This is that got an upgrade the other day. We talked about this. It refused to pull back. I believe it was Goldman Sachs' top pick there. Continuing to see momentum off of that. You got First Republic Bank. Actually, there's a lot of banks that look very similar to this. They're not the big names. They're going to be your regional banks, your smaller banks, your brokerage firms, bond trading platforms, things like that look a little bit stronger here. And this is just a beast. Look at this. Financials took a break. What about just after summer there? Take a look. Not quite. Just before the summertime, you got financials moving sideways to slightly up. Look at First Republic. No, I'm not having it, man. It just keeps moving higher. Very, very strong one. Look at Ameriprise as well. This gets you into the brokerage side of things, wealth management, etc. That one just broke out to new highs. A little bit shaky to start. I think we talked about that last Tuesday or so. And there you go. Finally breaking out, finally getting consistent volume and the sector and the market behind it. So we got this whole tide lifting across the board there. Looking good. And if you look at Wabtec, these guys, if you're not familiar with them, they do... they're like the air braking systems they're in the railroad industry, basically, put it that way. But it's like they make the brakes for the rail cars. So actually they're doing pretty good there. They broke to new highs as well. Technical pattern looks pretty cool because it's one of those breakouts where you have a series of equal highs and a series of very clean and obvious higher lows. Think about it. You spend all this time on the technical analysis, the trading, and I want to pick the great stock and all that stuff. Well, your opinion means nothing, right? The market could care less. What you want is for the pattern that you're looking at to be as obvious to as many people as possible. That's the strategy, right? So the strategy is not you saying, I see a breakout with a series of 3 higher lows and 3 consistent higher equal highs. Nobody cares, right? So if that's the way you define it, you want to make sure that others are very easily able to identify that, and that is very easily identified in web tech right now. So something I learned years ago, what your beliefs are could really make no difference in the world. You want other people to have the same belief that you do. You just like to beat them to the punch a little bit, right? A couple extras that I don't believe are on the list there. You've got Kimco. It's a couple REITs, actually. Kimco breaking out. It's an okay pattern there if you're looking at that, if you like that sort of thing. Actually, that was the only one. I give you one extra one here today. There you go. How do you like that? I see the comments there. All right, stocks in the news. What do we have here today? I will go to type the right thing first, and we'll say Boeing. A little bit lower here on the day. The Wall Street Journal says the FAA wants to look into more defects into the Dreamliner, actually. So this just can't catch a break here lately, but nonetheless, that's where they're at. We covered Bank of America already. Good move on Bank of America there. Better than expected earnings. They all did. It's basically just great for them. Great move for financials today. Lululemon is going to give Allbirds, which we talked about that yesterday, they're going to give them a run for their money. They are not going to buy them. They are actually going to get into the footwear space in an aggressive way. So I don't know if that's good news or bad news. It's obviously very competitive, but that is the news. And John Deere actually finished positive on the day. So it started the day lower there because employees at 14 different facilities couldn't reach an agreement with the United Auto Workers, the UAW, and they go on strike. Right? Got a little bit of a strike there at John Deere. Domino's Pizza was the one that missed today. Wild day of trading for Domino's Pizza. Total orders and staffing shortages are the key there. Not so much abroad. It was mostly here in the U.S. So overseas didn't look bad if you're trying to put together a fundamental picture for them. But here in the States, man, it's hard to find help. You know it. I mean, you see it out there. There's no hiding it. Walgreens, not typically one that has pretty wild days here, but they see their store sales up 8%, and the CEO comes out and says, we're not going to sell candy and pictures anymore, or they're going to, but we're going to focus on healthcare more. We're going to have doctors' offices and nurses' offices. We're going to make COVID vaccines and booster shots and all that a big part of our business, and so they were going to move forward with that. It was highly celebrated, by the way. That's a big move for Walgreens. I don't know if you know, but Walgreens doesn't do that sort of thing often. And then lastly, I'll just point out real quick, Avis, which is budget, and a whole host of other names there. Morgan Stanley downgrades them, says, hey, where they're at right now, it's worth about 25% less. That's it. It's a good stock. Everything is fine. It's just not worth this much. So that was their words, not mine. Not mine. I didn't do it. You guys ready for the class tonight, man? I'm looking forward to it. We're going to talk about, I'm getting a little sick of how, first of all, people don't like the wealthy. That's not fair. We should learn from them. But they also assume that the same tricks and tactics are not available to them. That's not true either, especially nowadays, right? So we're going to go over that in detail. I need to bring to speed some of my beginner investors, some of the younger people that are like, I've heard some of the buzzwords and everything, but I need to see the details. How does this work? So we'll spend some time on that, and I look forward to that tonight. Also looking forward to a little Buffalo Trace, see what I can do there. Yeah. We have a big staffing company here in town, and it's tough for them as well. I mean, you hear it everywhere. There's no hiding that one there. You demand a show tomorrow to see me hand over the office. There's actually not much in there. I've offered to take him shopping and start picking out the desk and everything because I have conceded, unlike politicians out there, I have conceded there is no chance that we're going to meet my deadline, and my bet is not going to be successful. But what did we decide on that over there? What are you doing? Are you playing games or something? What's going on over there?
No. I was listening to a video.
Listening to
of ours, of a future video of ours. I'm sorry. Something about The Office. I won The Office.
We got to go like desk shopping, right?
Yeah, we'll do a video on me picking out the most expensive desk that I can find.
Well,
just the nicest stuff. Yeah.
That that wasn't part of the deal. I mean, we can work out a budget, but I mean, we gotta
All right.
get carried away here. So I want an arcade machine, a golf simulator.
Oh, that'd be incredible.
Oh man. All right. Well, it is. It is what it is. So we'll see what we can maybe film of that one. Yeah. Right. Now, if the market by the way, if the market starts to fall again, like let's say Monday, yeah, I'm not saying there might be like a little fight or a side bet or something. We might have to work something out. But we'll see. So far, obviously, the markets look good, very strong, and it's hard to cheer against your own thing. But I just kind of thought it would happen, Yeah. Other catalysts, not during earnings season here. Earnings season will be the focus, especially the next 2 weeks, right? We're just getting started with earnings season. Next week is not even the busiest week. It's the week after, right? It'll be the third week, which is the busiest week where you have like hundreds of names a day. That's where all the excitement's at, Who really defines wealthy? Even the guy living in a cardboard box is wealthy. Yeah, I think it's probably a broad term. It's like the people that make a lot of money, the billionaires and the 100 millionaires at this point, inflation, right? So I just, that bugs me. I guess I'm old enough to say I came from a different time where if somebody made money, you asked them questions, right? You didn't spit on them. So that's... Nonetheless, there are games to be played, and I think it's only fair that those games are available to everybody. And so it's one of those things I've kind of fought for here, just growing the company, right? You should have the same advice. I don't care if you have millions of dollars or you're just getting started. You know what I mean? Yeah. Earnings season after financials tend to historically follow the same trends as financials. Well, that's a good question. Yeah, I don't know that we've ever done that. That'd be easy to do because it's always in the first week as far as the big financials go. So it's something you could do probably pretty simply with what we have. Yeah. You bought AMD November. You bought AMD puts. All right, let's see what you got here. 112, so at the money. I like that. You're just playing counter trend. Look, the trouble though is you're just getting started here, right? So you have a downtrend, pulled back. Everybody's just like salivating, right? Licking their chops like, I want to buy this pullback here. You know it. There's people excited about this stock. It starts to rally and just gets going, and now you're short. So I think you're going to need probably the whole time till expiration to get that. You're going to have some tough days, I think. Because why would it stop here? It's like it's just starting to get rolling. So maybe tough. Kirk is equal opportunity disliker of politicians. There you go. Hey, give you a reason to like them, right? Give you some reason. Hints on the Goldman Sachs advantages. I guess the hint may be that we're going to try someone else. Maybe. I don't know. Actually, they called. Goldman Sachs called today. I missed the call. I called back. I guess you don't miss Goldman Sachs' call because they didn't call me back. He will, though. He's a nice guy there. And you can throw out any comments about Herman Miller desks, chairs, arm rests, foot rests. It's
These aren't cheap over here. I'm looking at some desks.
Some desks, man. Those are expensive.
The Herman Miller desk? Oh, that's no joke. Yeah. It's bad enough that our developer, Charlie, has a foot hammock. We have to get a picture of that. He's got a foot hammock on his desk. I mean,
Nice.
He's a hippie. Come on. And he doesn't wear his shoes. He's watching, too. He takes his sandals off. He puts his feet on there. He codes all day. I'm like, a little foot hammock. What do you need a foot hammock for? You're sitting in a chair already. It's okay. My man wants a foot hammock. You got a foot hammock. You know what I mean? I like it. Hey, before I say something I shouldn't, I'm going to wrap it up. Get ready for our class here tonight. Looking forward to that one. A couple configurations to do, and I will be ready. 8 o'clock. Grab a drink. Come hang out with me if you're one of our clients. If you're not, I hope you'll keep us in mind. This is what we do the show every day for, just kind of let you know that we're not out playing golf. We're a bit different here. We really like playing with the markets and helping every advantage come to you that you obviously should get, right? And not just the rich people. So